We begin with breaking news. The Boston Fed President, Eric Rosengren, speaking right now, and Steve Liesman has those details. Hi, Steve.
Good afternoon, Tyler. Eric Rosengren, the Boston Fed President, speaking in Boston over some form of a teleconference, says he expects the rate of unemployment to rise dramatically. He also says that central banks can and must do a lot in crises. For the record, Rosengren was very early in saying the Federal Reserve may have to go out and do things it had never done before, and indeed is doing right now with the Boston Fed itself running a special fund to back up money markets. He says that regulatory changes will allow restructured loans, specifically those restructured loans from the banks, can be brought to the Federal Reserve and be funded that way and won't be frowned upon by supervisors. So kind of a encouragement from the bank supervisors to get to the to work with their customers and restructure loans. Finally, says it's the need to support essential workers, and it's the best of times here for let the public show public spirit here. Let me just talk about this rising unemployment rising dramatically. Only looking for a 0.2 of an increase in the Friday jobs report, but that's not going to pick up what we're seeing in the more frequent data, which is the unemployment claims. We had north of 3 million claims last week. Expectation for tomorrow is north of 3 million as well. Both of those together would raise the unemployment rate quite a bit by itself. So we're looking beyond the data, Tyler and Kelly, because it's not necessarily going to pick up this monthly data, going to pick up what's really happening in the economy. I've seen estimates today from Oxford Economics that as many as 20 million people could be unemployed in April. That compares to 15 million at the height of the 2009 crisis, guys.
And to further illustrate that, Steve, Bank of America thinks the jobless claims figure this week, remember, it was already 3.3 million last week, will be 5.5 million. So, I mean, this is, that's a pretty staggering increase.
I've seen estimates as high as that. I hadn't seen the B of A one, so thanks for that. I will say that some people are saying they may have to go back and revise last week. Look, during the financial crisis in 2009, we never had as many on the continuing claims as 7 million, and that took about 20 months to get there. We're going to get there in like a week or 2 weeks of time. So one of the things that's going to keep that number down, I believe, is that the state offices just can't process it. So they may be going back and revising data for quite a while. And the story here, Kelly, is that the initial phase of unemployment, the initial downturn in the economy, it's not going to show up in the official data. It's going to take the official data a time to catch up, and then hopefully the rebound will outpace the official data as well. So that's why we're looking, and we've been talking on this show quite a bit about alternative data, ways of measuring the economy in real time in a better way.
Steve, one quick question. Where does Rosengren fall in the spectrum of Fed presidents?
Well, he was hawkish for a bit there. He wanted the Fed to go a little bit easier last year in terms of reducing rates. He was very concerned about the corporate debt market. And by the way, that's proving to be a sort of prescient warning. If we had gone into this crisis here with less leverage and less corporate debt, we might be in a better place, or the Fed might have had to do less. He was very concerned about low rates increasing the level of corporate debt that's out there. Once it turned, and once the Fed got down to zero, Rosengren is a full-out dove here.